What's happening with AMC stock? That's the question on everyone's lips. There's a bit of a shuffle happening in the stock market, and AMC Entertainment Holdings Inc. shares are right in the middle of it. The shares have taken a dip, trading lower by 2.7% to $4.28. This is no random fluctuation. It's happening amid a whirlwind of market volatility, and all eyes are on the Federal Reserve Open Market Committee meeting. AMC, like its many counterparts in various industries, is not immune to the winds of change. It relies heavily on borrowing to fuel its operations and expansion. This makes it particularly sensitive to any shifts in interest rates. So when the rates change, so does the cost of borrowing for AMC. And this cost of borrowing, ladies and gentlemen, is a crucial cog in the machine that drives profitability and growth initiatives. Investors are keeping a keen eye on the upcoming FOMC meeting. And rightly so, as the wind in this meeting could set the sails for AMC Entertainment Holdings Inc. It's an interesting scenario where the world of cinema and the world of finance intersect, and it all hinges on the trajectory of interest rates. So why are interest rates so significant, you may ask? Well, AMC, like many companies, leans on borrowing to facilitate its operations and expansion. This borrowing isn't free, of course. It comes with a cost, the interest rate. When these rates rise, it directly increases the cost of borrowing, and this in turn could impact profitability and growth initiatives. Now, the Federal Reserve Open Market Committee, or FOMC for short, is the body that decides the course of these interest rates in the United States. The decisions made in these meetings can set the tone for economic activity, impacting businesses, and consequently, their stocks. In this context, the FOMC meeting is like a high-stakes poker game for AMC and its investors. The cards on the table are the interest rates, and the bets are the stock prices. If the FOMC hints at a rise in interest rates, it could mean an increase in AMC's borrowing costs, potentially affecting its bottom line and putting a squeeze on its growth plans. On the other hand, if the rates remain steady or decrease, it could provide a boost to AMC's operational and expansion strategies, possibly lifting its stock in the process. Investors, therefore, are tuned in to every word coming out of the FOMC meeting, analyzing and interpreting the clues about future interest rate movements. Their reactions to these interpretations could directly influence the performance of AMC's stock, causing it to rise or fall. In essence, investors are not just watching a movie at AMC, they are watching the performance of AMC itself, with the FOMC playing a critical role in the plot. The interest rate trajectory could significantly affect AMC's future operations and expansion. It's a thrilling drama, and the next act is about to begin. Stay tuned. AMC has had a roller coaster ride over the past 52 weeks. The performance of AMC Entertainment Holdings Inc. has been nothing short of a thrilling movie plot, with its shares hitting a peak of $62.30 and plummeting to a low of just $3.58 within the same time frame. A myriad of factors have contributed to this roller coaster ride. Market conditions, for instance, have played a significant role. The stock market is a creature of sentiment, driven by fear and greed, optimism and pessimism. And AMC, like all other stocks, has been at the mercy of these shifting sentiments. Company-specific news has also been instrumental in shaping AMC's stock performance. The company, like many others, relies heavily on borrowing for operations and expansion. As such, it is highly sensitive to changes in interest rates. With the Federal Open Market Committee meeting on the horizon, investors have been keeping a close eye on potential changes in the interest rate trajectory. Rising interest rates could significantly increase AMC's borrowing costs, which in turn could impact its profitability and growth initiatives. In addition to these factors, AMC has also faced its fair share of industry-specific challenges. The entertainment industry has been grappling with a host of issues, from the shift towards streaming services to the lingering effects of the pandemic. These challenges have had a direct impact on AMC's bottom line, further contributing to the volatility of its stock. In the face of such unpredictability, it's important for investors to remember the fundamental rule of investing: buy low, sell high. With AMC's shares currently trading at a lower value, some may see this as an opportunity to buy, but the question remains, Will the shares rebound to their 52-week high, or is the low just the beginning of a downward trend? Investors are advised to keep these figures in mind when considering AMC shares. It's a game of numbers after all, and these numbers could well be the key to unlocking a potential gold mine or avoiding a potential pitfall. As the story of AMC continues to unfold, one thing is clear: the ride is far from over. Buying shares in AMC can be done through brokerage accounts. Now you may wonder, what exactly does this mean? Well, a brokerage account is a type of financial account that you can set up with a brokerage firm. It's as simple as opening up a bank account, but instead of depositing money, you deposit securities like stocks, bonds, or cash. Once you've set up your account and funded it, you can then use that money to buy shares in AMC or any other company that catches your eye. The process is pretty straightforward. You place an order for the number of shares you want. The brokerage firm executes the order on your behalf, and voila, you're now a shareholder in AMC. But what if you're of the opinion that AMC's shares are going to decrease in value? Well, that's where options trading or shorting shares come into play. Options trading is a type of derivative investment that gives you the right, but not the obligation, to buy or sell a stock at a specific price within a certain period. If you believe AMC's shares are going to fall, you could buy a put option, which increases in value as the underlying stock price falls. Shorting shares, on the other hand, is a bit more complex. It involves borrowing shares of a stock from a broker and selling them with the hope that you can buy them back at a lower price in the future. It's a risky move, as the potential losses are unlimited if the stock price rises instead of falls. Whether you're buying shares or betting against the company, it's crucial to stay informed and make sound decisions. The stock market is a volatile place, and while there's potential for high returns, there's also a significant risk of loss. So, always do your homework, understand what you're investing in, and never invest more than you can afford to lose. To wrap things up, let's revisit the key points we've discussed today. AMC Entertainment Holdings Inc. shares are down slightly due to market volatility, with investors keeping a keen eye on the Federal Reserve Open Market Committee meeting. AMC's performance has seen highs and lows in the past year, with a peak at $62.30 and a trough at $3.58. Remember, you can participate in this market by buying shares through brokerage accounts or bet against the company with options trading or shorting shares. Stay tuned for more updates on the evolving situation with AMC stock.